Hey guys, Boris Lashman from BK Forex. Welcome to our Forex Daily Technicals for 4/19/13. The big story of the night tonight is that dollar yen takes out the 99 handle. As always, Forex trading carries a high level of risk, may not be suitable for all investors. We invite you to read this disclaimer very carefully, or pause the video once you've seen it and go back to the disclaimer once you've had a chance. Let's take a look. Dollar yen here. Look at this move. Clearly starting to pick up a lot of steam. The big impetus behind the move right now were comments by Japan's ASO that the G20 does not have any objection to Japan having a aggressive monetary policy. And the meeting between Jack Lew and him also basically reaffirmed the idea that U.S. believes the Japanese monetary policy is for internal purposes only, which is a code word basically saying the U.S. doesn't have a lot of objection to what's going on at this point. So that created a brand new move towards the buy side and broke out. I think this is a pretty powerful move today because we right back into that very critical 99 to 100 zone with a very strong power move. This is a 4-hour candle here, right here, into the area. The next area of resistance obviously is the 99.50 level, and then of course it can munch its way all the way through towards the recent highs, which is I think around 99.80, 94. 94, just within a striking distance of 100. Once we get anywhere close 99.50, all eyes going to go right back up to being, towards the 100, and it's going to be very interesting to see how we trade there. Those who are trading range are going to start betting on the fact that we're going to fail again at the century mark. Those who are trading momentum, I think you have to really let it run through the hundreds. You got to let it go through the maybe 110 in order to make sure that the 100 doesn't get rejected again as it did before. But today's move is clearly very constructive, especially off of a sort of a V-shaped bottom, and puts fresh buying power into the dollar yen pair. Helped basically rally risk everywhere across the corridor. Euro has not participated nearly as much. Actually, you know what? Let me just go back to the euro this way. Euro has not participated in the rally as much. It's mildly firmer here. This is the 4-hour candle. If you go to the 30-minute chart, you can kind of see that it sort of got a little bit up. But it's euro. The interesting thing about the euro is really being capped by this 131 level so far, and still trying to trade off of this big shock of a 200-point downdraft that we had 2 days ago as we were consolidating. The euro levels, of course, are very simple. The 31 to the upside kind of repairs the damage done a couple of days ago. The more important question is the break to the downside, the 130 break, really puts a much more negative bias to the euro on a longer term basis. So we're basically in no man's land, marking our way up and down, and the resolution of this range is really going to be around the edges here, 31-30 range, as it stands right now. As always, forex trading is can be very dangerous and is not suitable for all investors. So I invite you again to read the disclaimer before you go. Let's take a look at Aussie next, because Aussie's had a big recovery as well. The recovery here in the Aussie, based upon I think a recovery in gold, recovery in risk, and we still though remain capped by the 103.50, which used to be former support, is now resistance. This is sort of classic technical trading where you see the former support become relatively stiff. Fresh resistance. But I think what's interesting here is if you look at the Aussie, this is sort of a longer term chart. What you're seeing here is a formation of a pretty strong base and a retake of the 103.50 puts us right back into a much more positive structure. 104, of course, sits there as another point of resistance, and then we would have to recover. But if you look at this, this is a kind of a bottoming, really almost a triple bottoming structure. And a retake of the 103.50 by North America really puts us on a much stronger footing towards a drive all the way out to possibly 104. If you kind of combine the idea that the Aussie is leading along with the yen is leading, it leads you to consider Aussie yen today as obviously a very strong momentum candidate, and undoubtedly it's performing much better than the last couple of days. It's the 4-hour candle. We're breaking up out towards the 103s. So in many ways, the 103 in the Aussie yen gets retaken. You have it's conclusive to the idea of 103.50 in the Aussie, and the yen going higher towards 99.50s. Basically, I think this looks, if you're sort of betting on the fact that the yen rally continues, that we get more momentum and risk continues, this is a very, very interesting structure for the rest of the day, because the breakout here suggests that we really have 103, 104 in sight as a possible move in this particular rally. At cable is also doing relatively better. Let me just cable out. Cable took out the 53s, 53.20s, and now we're back on towards the recovery path. But for cable, this 54 still remains a very, very critical resistance level. 53.50 remains a pretty serious critical resistance level. It's all really contingent on just how much more risk the North American session really wants to give FX at this point. But the clear driver of the session today is no doubt dollar yen, which has been a big driver of almost all the moves in the FX. With little on the economic calendar, this could be a very interesting day to shape up to see if we can sort of take the risk all the way out to 99.50s and put ourselves in a position to run back the 100 levels as the day proceeds. As always, Forex trading carries a high level risk and obviously for investors. I invite you to read the disclaimer. And this is Boris Schlossberg for BK Forex. Have a great weekend. Over and out.